We have Mark Newton, the head of technical research for Fundstrat, back with us today. He's been on the show several times beginning this month last year. Each time, he forecasts what he believes will happen to Tesla stock, and surprisingly, he's been extremely accurate. First, he precisely predicted Tesla would bottom at $143 in April. Then he again correctly predicted that the stock, when it hits $265, will have an outsized jump. At our last show in October, he was very bullish about Tesla, saying it will get way past its all-time highs to $565 this year. Let's see if he still thinks this is what will happen. Fundstrat Global Advisors is a financial research firm co-founded by Tom Lee, who himself is a notable Wall Street strategist. Thank you so much, Mark. Love having you back again.
Thank you, Herbert. It's great to be back.
So you are one of the guests that I have. You've done, I think, the 4 shows now. Each time you're predicting the Tesla stock forecast and you're using tactical analysis. So you've been teaching me and the audience a little bit of, what this is all about. And surprisingly, for many, like some people who don't believe in technicals, you've been calling it. So that's why I'd love to get you to tell us what you think is going to happen this year. So the stock has kind of bottomed out, right? Hit all-time highs at 480s in December 16th. It's fallen now. There's a lot of reasons people use it. It's at, how low can it go? Let's start with that, which is what is the lowest in your technical analysis? How low can it go?
Thanks, Herbert. Well, I think the stock is getting increasingly very close to levels where it should bottom out, and that could happen this week or next week, honestly. And my thinking is that could happen near $314, which would mean a brief move to new lows, but it's largely just below current levels. So I think the majority of this move down has played out. This is not unlike how Tesla has moved literally almost every spring over the last 10 years. Normally, if you look back, it's interesting. Like I looked at all these years going back since 2015. Almost every year, it's down between 30 and 60%, starting from late in the prior year into usually between March and May, and it bottoms out, sometimes June. And so just like last year, it was down 47% until it bottomed in April. The prior year, 30% from February to April, 50% in 2022, 40% 2021, 64% 2020, 54% 2019. Really the only time in the last decade was 2017, where it actually climbed in the majority of the year. And then, 2016, unfortunately, was an interesting year. We peaked out in the spring and fell throughout the majority of the year. But normally, if the stock is already undergoing a pullback, and right now it's been about, 35%, I guess, since last December. We are getting close to sort of the historical average of what Tesla normally does during this time. And so, as you mentioned earlier, there's all sorts of negatives that people like to say, this is why this happened. But, the bottom line is this is sort of a garden variety correction for a stock that we all know is extraordinarily volatile and tends to move at a bit quicker pace than the regular market.
Okay, that's a very interesting insight. Do you think that drop in the first quarter of this year, is that because it's an auto company, it's because it's Tesla, or do you see something similar with other stocks as well?
Well, it certainly drops a lot, usually a larger percentage amount than most other auto stocks. I don't know that we can say the same about every auto stock. This particular cycle has been marked by a new administration, and so there's been a lot of criticism about alternative energy and EVs, and you know as well as I do, some of the things that are potentially going to be taken away, and the perception anyway is that once Trump took over, that potentially EVs would be under pressure, and so Tesla certainly has followed that. It's always been difficult to look at all the positives that this company is doing and try to truly figure out what the stock should be worth, because so many of them are off a few years down the road, and analysts never properly account for exactly what's happening. So it's always a sort of a tricky time to say, okay, if you're only looking at the car data, and they miss deliveries, then okay, then they missed, and so therefore the stock's going to be down. But as you and I know, this has nothing to do with the FSD or what's happening with just the robots with Oculus and everything else, what's being prepared with the robo-taxis going down the pipe. So yeah, logically, you would think that would be recognized by the street and have a certain percentage that you would ascribe to say, okay, well, this needs to be factored into the stock price, but it, the way most analysts work, it's just there's a lot of uncertainty. That's to put it
Yeah.
mildly. So.
Okay. So let's talk about what you're expecting for the rest of this year. Last time we talked was October. And at that time, you were pretty bullish. You said it's going to go down until November, and then it's going to jump up. It was exactly what happened. Now, you also said that once it hits its all-time highs, once it passes that, you see it keep going up even higher. Do you still believe that that's what's going to happen? Now, of course, there's always going to be choppiness along the way, but what's your prediction for the end of this year, the rest of this year?
When it did surpass all-time highs, which formerly was right around $414 for the latter part of 2021, and so it went up, a good 15 to 20% above that before peaking at 488, and now is subsequently pulled back. When it's time, I'm happy to share my chart and just sort of show you visually, how I'm seeing this, because it is, I think, incredibly important to sort of understand what the stock looks like currently, and really let me see if I can do this real quick. So I'll share my screen, and this just helps to put the stock price movement into perspective. So the big base, of course, which everybody has recognized from Cathie Wood and everybody else, lasted from November 2021 into, really the third quarter of last year. And then we did see the big breakout, and that was important technically. We did see volume expand. The stock had some tremendous acceleration. So now we've seen, a pretty decent pullback. Momentum has turned negative. It remains within what they call a technical downtrend since December. However, you are nearing what they call a 50% retracement of the prior low to high swing, and oftentimes that can be quite important. My view is that the stock would not get down under really these prior peaks from last summer, and that's right around 274, 275 area. So that should be really a maximum area where the stock would find a bottom. And I'm not certain that actually happens in the next few weeks. I think the stock is going to be capped. Either we're bottoming here and it holds 325, but if it gets under 325, it would have a final flush down to what I think is 314, only $11 below, and then we bottom, and then we should begin, a little bit of a bounce. It probably lasts about 2 months or so, and then I think the month of May, just based on my own cycle analysis, should actually be a time when Tesla might come under pressure again. And so May, June, I think, is sort of an iffy time, and thereafter, most of my work shows the stock can have a pretty decent rest of the year. So, I think it's going to turn back higher at that time. It should actually challenge and get over 488, which could lift it up to right near 614. That level would really equate to the distance of the move from August of last year to December, when added to right near 314, gets us to 614. So it's just a simple looking at the prior waves and saying oftentimes, sometimes these swings can be identical in price terms. And time also plays a huge role in the stock. I mean, it rallied for, a little over 100 days from October into December. When you look forward from that, we actually bottomed exactly where it needed to, which is right in the middle part of February, where those time periods are almost exactly equal. So there are some things technically for people that study this kind of thing that suggest, okay, it's getting near a time when it can have an inflection point and turn. The key takeaway, though, is that, we are still trending down. And so that means that for those that are trying to buy here, you are, fighting sort of a headwind. And until this is really alleviated, meaning the stock can break its downtrend, Um, there's more volume on the downside currently. The stock is making lower lows, lower highs. We just need to see some evidence of that coming to an end. And so my thinking is that happens in the next couple of weeks, and we start to turn up between now and probably late April.
Okay. And then you said May and June might be another kind of a choppy time.
I
And
think
then, so what's your, 614, did you say by the end of this
well,
year? Or
that's
did you say
probably
February
going to
next year?
come between June and the end of the year, or potentially next spring. And so that's
Okay.
a time when I think Tesla could honestly have a pretty decent time. Are you able to see this cycle that I presented, or should I reshare? I'm not sure if that's coming up
Nope.
or not.
No, we
Let
can
me
see.
let me let me
Yeah.
present again and see.
I mean, I can see the screen. I was
Yes,
showing it.
yeah. So here's just a simple daily cycle that I use to try to forecast, highs and lows in Tesla going back. And this one is just a daily chart, so it doesn't take into account the lengthier weekly intermediate term cycles. It's just more short term, but it's done a remarkable job at giving, both highs and lows. It did forecast a peak in the stock in December, and then a pullback, which really should bottom by late February. And then the stock rallies right until late April, between we see a little bit further downward pressure. Now, the pink line is amplitude, so it does not need to get down and revisit these prior lows necessarily, but it could potentially prove to be a choppy time. Thereafter, though, the direction is largely pretty positive into the spring of 2026. So, unlike the last time we spoke, when I was really, really optimistic, the stock could start to turn up right away and it was a very bullish time. Now I think it's important for investors just to be, tread a little bit carefully until the trends really start to stabilize a little bit more. And my thinking is that over the next couple of months, we'll have, potentially a better entry point, and also the trends will really start to show better evidence of turning higher. And I think we'll all know when that happens, whether it be because of fundamentals or some catalyst or something is announced, that the stock will certainly start to trend better. And so I think that would be the time to really follow the move versus, trying to pick a bottom and a downward trend, which has already taken us down 35% in a couple months.
Okay. So yeah. So based on this, I think you're saying that it's going to be choppy and low, but then the jump will happen in the second half of this year and maybe
Yeah,
even the first quarter of next year. Okay.
that's right. That's right. I think that we'll certainly see some evidence by late spring where the stock starts to turn higher, in my view, and that might be a time that the market itself starts to show a little bit more broad-based strength, where different parts of the market can start to strengthen.
Okay. Well, let me ask you about that then. What is happening with the stock market trend in general? I think last time I asked you in October, you said just wait for it. You guys are gonna share it by the end of the year, which you did. So, what is your forecast for the stock market, the broad market trends this year?
So my target for the end of the year is 66.50. I do expect that we will be up, at least more than 10% this year. I think it's very difficult to take two back-to-back years of 20% gains and simply call for a bear market when breadth, momentum are still in great shape. We see the high yield market is still very tight compared to, the spreads versus treasuries are still very, very tight. And normally, if you see evidence of market turmoil, you see evidence in the bond market before the stock market, honestly.
Mm.
The market tends to turn a little bit more defensive, and we haven't really seen that all that much. The market's been pretty broad-based. We did see some breadth deterioration from last fall, but that since has been replaced by some decent movement in many of the large cap banks, which have not only helped Europe to do well, but also here in the US. And we see stocks like JP Morgan and Berkshire, which have done, phenomenally well.
Mm.
So I think that's still a great sign. And technology, for as many people who want to try to fade tech and say that, well, the Magnificent Seven have become, have gone from the Mag Seven to the Lag Seven,
Mhm.
so to speak. We really haven't seen that. I mean, things have still been very, very good. A lot of great technical patterns within the charts of large cap technology. So, if I share my screen, I'll help to share,
Yeah, please.
share with you the fact that, the last few months certainly have been a little bit choppier. We did set a new all-time high, just as of as early as back on the 19th of February, which is, incredible because when you hear everything that's going on around us, certainly you would think
Hmm.
the market is really, um, faces a lot of headwinds, but the market largely has ignored a lot of this tariff talk or talk about higher inflation, and it's been pretty resilient. So it's been a choppier trend, no doubt, and some of this resilience has come from large cap technology. If you were to look at, say, the eco-weighted S&P, it's not as strong as the S&P and QQQ with all its large cap tech holdings, but um, I think this is a choppier year, but I also suspect that this part of the year normally seasonally is weak anyhow in February, in an election year where there's a change in administration. And normally coming into the new year, that time between January and March is a lot choppier. And so seasonality dictates that, this shouldn't be a time where it's straight up. I think that we're all trying to have an understanding as to what policies will stick, what won't, and it's important not to really get ahead of ourselves and jump to conclusions when much of this is really not necessarily what's going to be happening, but more just a negotiation tool. So that's my view, and I think that earnings remain solid. The overall stock market technical trend is still in great shape. And to the bullish investors' credit, there's a lot of bears out there. People have become honestly quite upset and pessimistic, just given the rapid change that we've seen in recent weeks and recent months, and that's actually a very good sign for the market. I know people think the market hates uncertainty, but we just made new all-time highs a couple weeks ago, and markets are still showing very good signs of strength outside of the last week, which I don't suspect lasts too much longer. And so there's a lot to be positive about, despite all this pessimism. And if anything, that's normally a time you want to step in and be long this
Mm.
market and not be on the sideline.
Yeah, interesting. So you're pretty bullish. Still, what about the AI plays, the AI companies? If you want to separate it out from the Mag 7, is AI still on a boom? Is it still something that has there been a pullback at all, like you were hinting a little bit earlier?
Yeah, it's very different. You have to sort of split, the category up, I think, among not only large and small cap, but just among sectors, and you'll get a greater feel for what's still carrying the load. I mean, the majority of the Mag 7, honestly, who are all involved in AI or fastly, trying to get involved. It's funny, like you heard the conference calls for Apple and
Hmm.
Alphabet and Meta, and they all mention NVIDIA in their conference calls and the fact that they're spending lots of money in trying to, you know, nobody's abandoning NVIDIA. So this whole DeepSeek threat, I feel, is just not really all that legitimate. I mean, NVIDIA is going to
Hmm.
be around for a long time, and it's certainly is worth paying attention to. And I don't sense Jensen Huang is going to allow a second time of disappointment after the people were shocked about DeepSeek. So I'm pretty optimistic. I mean, NVIDIA acts quite well. I do embrace the AI trade, but certainly we've seen a few signs of it slowing, at least with regards to earnings itself. I think that, in general, the revenues have been, pretty solid across the board, but, it's just going to take time. That's not my expertise in fundamentals and earnings, but it's more just paying attention to the broader tech trend. And one thing that we've seen is that, semiconductor trade, to some extent, has faltered a bit, and we've seen strength more in software companies and seen the push, in many of these stocks back to new highs very rapidly at a time when semis have been, they face some selling pressure, and stocks like AMD and Micron are just nowhere near the kind of leaders that they were a few years ago. And so it's been
Hmm.
proper to pay attention to this sort of rotation that's happening within the group. And you really have to stay with where the strength is. Honestly, that's what most technicians would tell you. And
Hmm.
momentum was the best factor of all of last year, as well as the last dozen years. And so it always pays to stick with and or own or buy stocks that are trading at or near all-time highs that are doing well,
Very interesting.
and avoid buying dips and things that are, a lot of selling pressure where you think, well, the value's a lot higher, but the market's wrong. It doesn't recognize it. Well, 9 times out of 10, the market's right. And you just really want to pay attention to what the stock's technical trend is telling you. And in this case, Tesla has lost, a little bit of appeal on a short-term basis over the last month or two, but it hasn't really dampened my enthusiasm for the intermediate term trend. We did have a pretty big breakout last spring, and I don't think that's over by a long shot. I think that's, there might be some first-year challenges, but I'm pretty optimistic about the next couple of years, fundamentally, from what I hear, not only on your show, but also just looking at the pure technical trend and how I think increasingly what they're involved with is going to be, is going to start to be reflected in the numbers, and that's likely what's going to get the stock to start moving.
Okay. Mark, do you do you track what happens with kind of, I don't know what the word is, sentiment, of course, and like the elephant in the room, of course, is Elon is now part of the government. There's been a massive backlash calling them Nazis, people protesting in Tesla retail stores, people, just getting very aggressive about Tesla and Tesla owners.
Yeah.
So I don't know if it's true. I'd love to know it, but the sense that we are getting right now is that the hatred for Elon and Tesla is at this peak and probably going to keep going up higher. So do you think that has impacted the stock? Do you have if not, and if you don't follow that, of the reasons why, but at least the technicals, do you actually follow the political sentiment like that?
I do follow sentiment. I think it's more difficult to say this is what the trend is going to be based on either hearsay of a few people around you or just trying to understand what the news media is trying to say and what their narrative is. And, regardless of what side of the political spectrum you're on, the news media does have a bias. It's a little bit left of center, to put it mildly. So anything that Musk is now involved in and working with Trump is going to be, unfortunately, attacked. They're going to try to find fault in what he's doing. They're going to try to separate his work from Trump's and try to put a wedge between them. And as to how that affects the stock price, I think that's more difficult to understand. Obviously, if you're on the one side of the spectrum, you're going to embrace it. If you're on the other side, you're going to not buy a new Tesla, or it might be people that are trying to sell their Teslas. I don't know. Once you get in and drive the car, that should really be all you need. You really shouldn't think about politics one iota. But people certainly put their money where they're certainly how they believe, their theories and beliefs in life. And so, everybody's certainly entitled to do that. That's what makes the world a great place. You can vote with your wallet. But I just don't sense that, I'm not sure that it's going to be all that big of a hindrance to Tesla's numbers. Like I don't put any stock into the fact that he's working more with Doge and therefore he's losing focus with Tesla. I think that's completely wrong. But I sense that the perception from a lot of people is that could happen. And the perception sometimes is what moves the stock. It's less about what they're actually doing. It's more people's just sentiment around the company. And it's gotten to be, unfortunately, a political stock, which means that, for right or for wrong, that is going to be an overhang, I think, at least for this year until the numbers really start to, improve materially.
Okay, so one thing I've been learning is that the economy, the sentiment is what matters. Are we on a risk on or are we risk off environment? Is there money sitting on the sidelines? Because the point is that no matter if we're in a risk off environment and everybody's really, really pessimistic, it doesn't matter if Tesla keeps showing all these wonderful, look, here's a new product, here's a new thing. Nobody cares. But if it's a risk on, Now that's when announcements like this will then be able to, because people are willing to take bets on these potential futures. Are we in that today? Are we going to be that like in the rest of this year?
We are still in a risk on type phase. I know it doesn't feel like it in recent months. It's been very choppy. Um, it's been right to pay attention to the sector rotation because not all groups are certainly moving higher. Financials and technology, to their credit, have done quite well. Other areas, have not of late. And when you look at the car industry, it's come under a lot of pressure. And I would mention the alternative energy area. And just, if you look at the global clean energy ETF or the solar ETF, those have been under substantial pressure now for 6 months. So Tesla, I do think that being within the administration might give Tesla an edge over other EVs. Trump could certainly, favor Tesla in certain ways, but when you remove, most of the chargers in the government buildings and talk about, let's just say that right now there's a little bit of a cloud that's over the stock. There's no doubt, and so it needs to come out with some strong fundamental data and something that can serve as a catalyst to really help, to turn things up. Elon has always had a history of overpromising, but it always gets him closer to the target than I think almost anybody in the world, and people know that. He might make grandiose claims, but he works hard to make sure that he gets there, and that's something to his credit where it's just a different mindset than many other CEOs take, and so he pushes hard to make sure they can eventually get to where they need to be.
Okay, well, thank you very much, Mark. Really, first of all, deep respect for you for actually willing to, coming out, giving actual numbers when I push you to say, give me a number for 3 months from now and 6 months and a year from now. And, that's obviously nobody can predict the future, but at least you'll throw it out there. And you have your logic and you share that logic with us. So that I really appreciate that. And we'll see what happens this year. So basically, bullish on the second half of this year. You said you gave some numbers of where the potential lows would be in the next 2 weeks and in the next several months. Bullish second half this year, maybe 614, if not the end of this year, but certainly first quarter of next year. And it's looking like you're pretty bullish. You're bullish on the economy. You're bullish on the Mag 7s. So far, still these thesis is still holding strong, despite, this is the interesting thing, despite what everybody actually feels, not being shown by the numbers. So
that's exactly right. It's one of the more interesting starts of the year in a long time, where if you had ignored the price charts and just heard everything around you would think the market's down 20%.
Yes,
and it's like the market's actually at new highs, and everybody's ignoring all the good things. So I think this is going to be fine. I'm pretty optimistic for the year, but we have to weather this period for Tesla right now, and it's just. Elon Musk is a little bit of a lightning rod, and he enjoys the confrontation, and he doesn't back away from it. And so I have a lot of respect for his vision and what he's going to do with this company and what the company will do, and with Tesla as well as his other companies. But I think right now the trends are down. The trends are reflecting exactly what sentiment is for Tesla, at least amongst those that might have invested in it and have too short of a time frame and not as long-term of a vision. And so that'll change. And this is, as I explained in the first part of the conversation, it's your garden variety correction for Tesla. It's done this many years, and so you just have to be aware of the volatility and pay attention. When it finally starts to turn higher, I'll be back on your show because I want to be really bullish when the stock starts to act well. So we'll make sure
you tell us,
investors about trying to be really ahead of this.
Yeah, one of the things you really do really well, I think, is when you notice a turn, and then you will then, ride it, and you'll tell us that this is the turn happened. That's the key thing that we're waiting for. Thank you so much, Mark. You follow Mark on his X account at Mark Newton CMT, and then go to the website at fundstrat.com. And then you can actually still, I think, sign up for this 30-day free trial for FS Insights. Very well respected Fundstrat with Tom Lee and you. you're often in the featured in these media news outlets. And so I appreciate you spending time with us as well. Thank you, Mark.
My pleasure, Herbert. It's great to be here. So thanks. We'll look forward to joining again soon.
Yep. Bye-bye.
Bye.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.